Update news about crypto. Welcome to episode 13. Subscribe now. According to Laura Shin, why does our market in crypto different now? StockSmart's interview.
This app store for decentralized applications. That's, what Vitalik's conception was from the beginning. And I think it's panned out that way. If you look at the fact that you have things on Ethereum as diverse as, lending and borrowing protocols and decentralized exchanges versus NFTs that are, for Bored Apes or domain names or, it's really as diverse and flexible as I think he kind of envisioned.
You mentioned about Bitcoin and Ethereum being the somehow relatively more established exchange. They've been to a lot of crashes and they're still here. They're relatively holding their value. Is there anything that scares you that could possibly be a big potential risk that may somehow hit even the more established chains such as Bitcoin and Ethereum?
It would be some kind of, vulnerability in the blockchain itself, which has happened, but they've just patched them before they became publicly known. But if the blockchains themselves became hacked in some fashion, obviously that would be a major issue. It would pretty much crash the crypto markets. I don't know how long that would last. I don't know if it would be like a permanent type of situation, like if it would just shake confidence to that degree, but it would definitely shake confidence at least for the short term.
The speaker argues that the volatility in the crypto market is driven by its novelty, limited adoption, and the technology still being in its early stages. He believes that the market will mature over time, leading to less drastic price swings.
It's so interesting to imagine what you mentioned also about hacking being a possibility. But I guess what's so interesting about that is that there's a lot of possibilities. We can't close a certain door, and no matter how decentralized something is, there's still ways on something that could possibly happen that could affect a particular network. I want to ask this in terms of in this part of the world, blockchain gaming has really brought forth adoption. Play to earn NFTs that are highly connected to gaming. I guess the biggest concern that people are seeing towards this is the sustainability of the games being playable, plus the rewards that are attached to it. I guess my question is twofold. How do you think this will play out, that it becomes relatively sustainable, and how does this translate into other portions also of the globe? Because the user base is primarily getting bigger in Southeast Asia, in South America. I guess my question is, how does this scale to majority of the world as well?
So as for the first part of the question, like for instance, I had Gabby Dizon on my show and I was asking him about how the price in SLP maybe had kind of gone way up and then had pretty much crashed. And he said, well, it's just going to be a problem in all of these systems where what happens is once a game or a coin gets some traction, then you get all these speculators and they kind of drive up the price, and it's not necessarily organic. And I think I did see that AXIE is like kind of tweaking some of the game mechanics to, deal with those issues. So I imagine it's probably going to be some kind of trial and error situation. And as time goes on, there might be a way of kind of like tweaking the crypto economics. So that way it kind of accounts for that type of behavior and like lessens the impact. But I personally haven't read how they're changing it. So I'm not sure like what the mechanism is or, I don't have an idea yet about how that might be addressed. And in terms of scaling, already we are seeing that there are specific layer 2s that are built pretty much just for gaming, which, has pretty specific needs compared to some of the other, like if you compare to, for instance, like the JPEG side of NFTs, where it's just like about profile pics or whatever. you're not going to have as many blockchain transactions at all compared to like in the gaming, right? And so for like Ronin or for Immutable, like, you know, those chains have like pretty specific characteristics for gaming. And it's just going to be different from other types of layer twos. And so I mean, this could be another reason why it's definitely going to be multi-chain, because there's just going to be probably different blockchains for different purposes, and they have different features, and people will select based on that.
The speaker acknowledges the challenge of creating sustainable crypto gaming ecosystems, suggesting that game developers will need to adjust game mechanics and crypto economics to mitigate speculation and price fluctuations. He believes that the blockchain gaming space will evolve to be multi-chain, with different blockchains optimized for various purposes, like NFT trading, gaming, and DeFi. While acknowledging that the initial hype around NFTs centered on JPEGs, he believes that their utility will expand beyond profile pictures, becoming crucial for online status and identity. The speaker highlights the growing influence of institutional players like Tesla, KPMG, and Mark Cuban in the crypto space, showcasing the evolution from a primarily retail-driven market to a more institutional one.
An update for Fear and Greed Index. Thank you and see you on the next video.